You're watching today's video technical update presented by FX Times. It is Thursday, September 2nd, 2010. I'm Fan Yang, your technical analyst, and now I'll go over some developments in the Forex market. The platform I'll be using for analysis is VT Trader. The US dollar appears to be in consolidation or correction mode. The euro dollar is in correction mode, looking to retrace 50% of the decline since the last non-farm payroll release. The pound dollar, however, is consolidating, and the US dollar has a slight edge in that pair. The US dollar Japanese yen is consolidating as well, but the pressure here is bearish. The Aussie dollar may actually have taken a bullish stance, and the US dollar Canadian dollar is consolidating after failing to break resistance at 1.0670, but also failing to break below short-term range support at 1.05. Let's take a closer look. This video is being produced at about 1 p.m. Eastern Time during the US trading session. Starting with the euro dollar, here's a daily look, and you see the market has retraced 50% since the rally in June to early August. And this was after your non-farm payroll in August. And now ahead of current non-farm payroll, the market is sort of has bottomed here and probably retracing a little bit, correcting a little bit. We see the RSI here break above 70 and now fails to break below 40, so it's actually still a bullish look, or at least a ranging look, because you have your RSI here dip below 30 and then above 70 and now staying above 40. So there is a bullish bias still in the intermediate term, and that is now let's switch over to the 4-hour time frame. We see a couple of counts here. I'll get into it in a second, but mainly we see a possible 50% correction ahead of the non-farm payroll, because that's a logical place. If the market is to be seeking equilibrium ahead of the release, the 50% would be a logical place. It's also an area of resistance for this previous consolidation. So the market at the moment, so I have a count here, 1, 2, 3, 4, 5, and the market may be correcting ABC to finish an impulse wave, which has some bearish implications. The other count, which is also possible, it's an alternate count, is that the market has been bullish, and this is a correction, and this is a B, and basically this is C down here. Okay, and then we may have started our impulse wave at 1, 2, going towards 3, and that both these counts actually point towards this 1.29 to 1.2950 area. So there's a consensus in both of these scenarios to be bullish in the near term, and the target is 1.29, 1.2950. Then we'll see what happens after the non-farm payroll to see how the market reacts. Okay, moving on to the pound dollar. The pound dollar has been bearish and it's consolidating, but unlike the euro dollar, which has rallied, the pound dollar continues to slide. Okay, and the projection at the moment goes to 1.5270 using this projection. So this sort of a negative reversal projection sees the market going lower. Just simply looking at the highs and lows, we continue to make lower highs and lower lows, so the market is likely to head down towards that area, although we may have some dried up volatility and we may have some support here ahead of the non-farm payroll before the next move. Okay, so looking at the daily, we see that we have turned this rally, but the thing is, this decline has been sort of laborious, and then your RSI continues to be above 40 as well after rising above 70. So just like the euro dollar, there is still some intermediate term bullish bias to this pair. At the moment it's supported at 38.2%, but short-term look is bearish and looks to push the pair lower. If you look at daily, we could see the next target at the 50% at 1.5113 area. So if the market after the non-farm payroll doesn't start rallying, and we may use this 50% of this previous consolidation as a threshold, which is 1.5605 area, and that's also where the moving average would be residing. So if the market breaks above this moving average and in this area here, 1.56, then we may be starting a bullish trend. But at the moment, the target, the market is bearish, and the target could be the 50% mark at 1.5113. Moving on to dollar yen, which has been very weak. Here's the daily, and the 83 area is the projected target for this negative reversal signal. So very bearish. But ahead of the non-farm payroll, we are consolidating. We basically we are consolidating between 84.50 and this 83.80 area, give or take. So this is a tight range, and the market failed to break above yesterday, and now is spending some time in the middle of this range. So dollar yen is still going to be bearish if after the non-farm payroll, if it doesn't rally and break above this 200 moving average, we should continue lower to 83. And now I'm going to look at this consolidation and map the equilibrium of that, which is basically this previous high. You see the market came up here, almost broke above the equilibrium of this consolidation for a bullish look, but failed. So again, this area, if the market breaks above 85.60, 86 area, that should be a bullish sign. Otherwise, the market is still pressured and should go lower to 83, and perhaps the continue to go lower into the historic low at 79.75. Moving on to the Aussie dollar pair. Here's the daily, and just to remind you, we had a head and shoulder, broke below, and here is a pullback. So there is still a possible bearish attempt here after this, but it doesn't look. It's not established. We're still in the ranging / bullish mode. The bearish mode is the alternate scenario. Here, the primary scenario is that 1, 2, 3, 4, and another wave up towards this previous high here, and maybe even break it. These previous highs here. So that's the primary count. The other count, A, B, C, we have completed a retracement and looking to decline. That would be established if the market can break below these channel supports. So we should stay with the mode, which is still bullish or at least ranging. So with the bullish mode, after the market broke above this trend line, we had this test of it, and the market continued to rally. So basically, we could have had 1, 2, and this could be a third wave, which can extend towards 0.9280 area. But right now we are at 100%. 100%. So we basically had 1 wave and 2 wave, and that's a Gartley pattern. With some so there's a bearish suggestion here at the end of this wave, and the market at the moment is consolidating, and not surprisingly, because we're heading into the non-farm payroll tomorrow, so there is an event risk which may slow this rally, and after the event risk we should see if the market is ready to continue higher, or whether this is a Gartley pattern for another swing down. And in the daily, another swing down should not target further than this previous low here, because until this low is broken, the market is still ranging or bullish. So if the market's ranging, then we have the low here at around 0.88, and our high here around 0.9225. So that may be the new range. Finally, let's take a look at the US dollar Canadian dollar pair, which could not break resistance here above at 1.0670, but it also couldn't break below support here at 1.05, so it's forming a consolidation, a ranging pattern in the short term, When you look at the 4-hour time frame, you see this more clearly. So if the market breaks below 1.05, it's a double top with a minimal target towards 1.0340 area. So this is a 61.8% retracement area, and since the market has been ranging, you see in the daily it's been ranging. Our target should be around the equilibrium of the range, because the market tends to revert to the mean. And you see where these averages are all around that area, just above 1.03. So that's a logical area for support during this decline. Okay, so that's the US dollar Canadian dollar pair. You can read more about it on fxtimes.com. That wraps it up for today. Visit fxtimes.com and register for tomorrow's live coverage, which will go over the reaction to the non-farm payroll. Thanks again for watching, and good trading.